For more on the G20, we're joined by Dan McClory. He's the managing director at the Bonwick Capital Partners, and he is joining us from Irvine, California. We just carried some of the opening remarks. You heard from the central bank governor, Zhou Xiaoming, or Zhou Xiaochun, I should say, and he had a confident outlook for the second largest economy, saying it remains on sound footing. We also heard similar remarks from Premier Li. What's your read on the start of the talks and these comments in general?
Well, Mike, it's great to be on the show, and I think it's important to have a historical perspective for the G20 meetings in Shanghai. You know, the last time China hosted the G20, you got to go back to 2005, and at the time, China was the fifth largest economy in the world. So fast forward to today, the number 2 economy on the planet, inclusion in the special drawing rights, the World Basket of Currencies, ascension into the MSCI indices for China-listed stock quotes. Today, it's just natural that this presidency of the G20 has evolved and is in China's hands. And I think China has a perfect opportunity to set some examples in several key areas.
Which are?
Well, first and foremost, China is leading the way in showing the world that a consumption rebalancing of their economy can definitely take place. And, you know, the U.S. had been sort of the consumer of last resort in the world economy, but now China is really adding every quarter to its consumption-led economic growth. Now, the backdrop to this from a world economic perspective is what I call the oil dividend. So if you look at the amount of wealth that's about to be transferred, the wealth and spending power from global producers to consumers, it's in the neighborhood of about $2.5 trillion. We consume about 100 million barrels of oil a day at $100 a barrel, which has been the price. That's about $10 billion a day, or $3.5 trillion a year. Cut that by approximately 2/3, and you've got $2.5 trillion in economies throughout the world, China, the U.S. included, that can take that money and use it in a consumer-driven catalyst to the economy.
So that's something, obviously, to keep our eye on. The Chinese finance minister also calling on the member countries to come together on economic policy to reduce barriers to cross-border trade. How likely is that, do you think?
Well, you're seeing it in several different attempts. You know, we've certainly had China take a lead with the Asia Infrastructure Investment Bank. So pulling together, you know, major countries throughout the world to really attempt to have some cohesive policy that's been put together by frankly a new force in the world, and that's China leading that. So I think that's one area we can see. A second area that I would point out, and this has to do with the global rebalancing, commodities being in and out of favor, is in China outbound investing. So China has also gotten very, very active lately in expending capital outside of China to acquire assets, whether it's companies or technologies or distribution systems. So I think those are a couple of ways, both internally and externally, that China can show its example and can spur the other G20 nations onto action.
Dan, we've got just about 30 seconds or so. I know this is a tough question to throw at you and to kind of boil it down to 30 seconds, but the IMF is suggesting bold action to help with the slowing global economy. You touched on oil. We see how devastated Venezuela is in terms of one country that's been hit pretty hard by this. What are the stressors you see out there, and what steps are needed?
Well, you know, clearly financial reform in a number of economies is warranted. And China, again, has led by example. It's going through a process of deleveraging that would make the aftershocks of those types of adjustments, you know, far less painful than they are for some other countries. So I think moving from debt-driven and debt-financed private sectors to equity-driven through the stock market, for example, like China's recent pronouncements about having more of a registration-based system for companies, showing that it's not just about banks and maybe the top 4 banks and state-owned enterprises, but spreading that money around through equity financing to companies throughout their growth stages in a variety of industries, including innovation and services, you know, beyond the smokestack industries that we've seen.
Dan McClory joining us from Southern California. Thanks so much.